Hello friends, a very warm welcome to my channel. In today's video we are going to talk about Laurus Labs. So this company is a very popular company. A lot of people are holding this stock and we've got a lot of requests to make a video on this. We have analyzed this company long back, maybe a couple of years before, and the stock actually gave a dream run. It became the poster boy of the pharma sector. And thereafter there were some headwinds which the company was facing. They were not able to meet their growth targets, and that's why the stock has seen a very big correction from the top levels. So people who are already holding, they are totally confused as to what to do with it, whether they should continue to hold on or exit. And people who are sitting on the sidelines and watching, they are feeling that the valuations have become mouth-watering now, and they are thinking whether this is a buying opportunity or not. So we'll discuss what are the latest developments in the company and try to understand whether is this a buying opportunity and whether the existing shareholders should continue to hold or not. Before we begin, if you are new to the channel, please do subscribe and hit the bell icon to get notifications of all the new videos. And if you are not a part of our Telegram channel, do join today by searching my name on the Telegram. So before we talk about Laurus Labs, I'll just give you a brief about the view on the Indian equity markets. As you know, I've been a little bearish in the last few weeks or a couple of months about the Indian equity markets, and we have stopped buying in the last few weeks. And that view has played quite well. If you are a part of our Telegram channel, you will daily get an update from my side. So that bearish view has played quite well, and the Nifty has corrected almost to the levels which we were targeting. So now our view is slightly changing. I am expecting that the market can bottom out in these levels or in this zone of 16,500 to 800, as is a very major support in the long-term charts. So unless there is fresh bad news, which is a very major news, I don't see this zone of 16.5, 16.8 breaking down, and mostly the market should bottom out at these levels. Talking about Laurus Labs, in this video this will be our agenda. We will discuss in brief about the business model of the company just to understand what we are talking about. Then the recent financial performance of the company and how the stock has performed the recent few months and why the stock has fallen. What is the outlook which the company is giving for the next couple of years? What are the valuations at which the stock is trading? We'll see the chart and we'll also try to form a view as to what should be done for the existing and new investors. So this is a chart after IPO. The stock was into a consolidation for a very long time, and thereafter whatever patents the company was applying for and capacity expansions the company was doing, the company totally transformed its business from just an API manufacturer to a integrated player into formulations, APIs and also CDMO business, and that played out very well for the company. And post-COVID, there were a lot of tailwinds in this industry as well, and that's why the stock performed really well. From the levels of 5200, it shot up to almost 700, and thereafter, when the company was giving some targets that they will be a $1 billion revenue company by 2023, FY23, that was not achieved, and that's why the stock went into a correction mode. And still the charts look weak and the stock continues to fall, and we will try to understand why this is happening in detail in the coming slides. So this is the business model of the company. The company is an integrated player in the pharma sector. They are into formulations business. So the first segment is the generic formulations. They are also into APIs and advanced intermediates, which is a substance which is made prior to formulations. They are also into CDMO, or the synthesis segment, wherein they do contract manufacturing development for other companies. And recently the company has also ventured into biotechnology. So they have started Laurus Bio as the fourth segment. So broadly, this is the overall business model of the company. Looking at the revenue trend the last 6 years, you understand that the stock price did not go up just by itself. The performance of the company has drastically improved in the last few years. The company did a turnover of just about 2,000 crores in FY18, which shot up to almost 5,000 to 6,000 crores in FY22 and the trailing 12 months. So this is how the growth of the company happened in the last 5 years, and that's why we see the movement in the stock price as well. So this was the outlook which the management was giving when the company was during its best times in FY21 or so. So they were expecting the company to continue to do very well in terms of business, and they were targeting $1 billion revenue in FY23. And now that target is far from achievable, and they have started cutting down their expectations as well as targets for the investors, and that's why the stock has started correcting from the top. In these 9 months of FY23, this has been the performance of the company. The revenues went up by 33% compared to the earlier year. So in terms of revenue, they have done well. Overall, at a company level revenue, they have done well. Segment-wise revenue, there have been drastic changes which we'll discuss. But in terms of margins, the gross margins have gone down by 160 basis points. Profit after tax has gone up by about 15%, but the margins have again reduced. what you can see is that although the revenue has grown by 33% overall, as we go to the bottom of the P&L, the growth rate is decreasing. The EBITDA is 26% growth and the net profit is just 15%. So there is a lot of pressure in terms of margins of the company. Partly this is because of inflation and partly because of other factors which the management explains. Because of the management not being able to meet their FY23 goal of $1 billion revenue and cutting down their outlook for FY23 as well as FY24, and the margins seeing a lot of compression, the stock price has started correcting. Anticipating the growth which the management was giving an outlook of, the stock market in advance was giving the company higher valuations, and when the market saw that the growth was not achievable, the targets were not meeting, then the valuation started contracting and the company's stock got degraded. That is why the stock price is falling. Segment-wise performance, if you see in the last 9 months, the FDF, which is a formulation segment, has degrown by almost 46% compared to last year. The APIs are slightly in the uptrend by about 26%. The CDMO business has grown drastically well by 248%. This has supported the growth in the company in terms of overall revenue. The biosciences is more or less just about 20% growth. So overall the revenues went up by 33%, but there was a bad impact, a huge impact on the formulations business. So now these 9 months, if you see the segmental revenue, APIs contribute about 41%, synthesis also almost the same. The FDF share in the total revenue has gone down to just 16% and the bio remains somewhere around 2% like last year. Now, if you see the margin trend, earlier in the later part of FY21 and early FY22, the company was doing an EBITDA margins of close to 33-31%, which has gone down to almost 26% in the recent quarter. So this kind of margin compression trend we have seen in the company. So these are the problems which the company is dealing with. The company has been cutting the growth targets, they have been feeling the margin pressures, and that is why the stock price is going down and the valuations are getting derated. Now, what is the outlook which the management is giving going forward? The generic FDF business, which has seen a lot of hit in the last 9 months, you see that in the last quarter it has seen a little uptick. The revenue went up from about 149 crores to 249 crores in the generic FDF business. So the management says that the worst time of this particular segment is over and slowly it will start recovering from here and be normal in the times going forward. In terms of global filings, the company has been continuing their filings and applying for more and more patents across the globe, and you can already see that in ROW they have already got 40 patents and waiting for 16. Canada waiting for 6, EU 1 and US almost 10 patents. So their filings continue as they were earlier. In terms of the Laurus Bio business, which was recently started, this has not shown much of growth up till now, but the management is positive that because they are doing some capacity expansions in this segment, post capacity expansion there will be a uptick in this business as well. So these are the two pain points when we talk about specific segment wise revenue, and the management is quite hopeful that these pain points will be solved, and the company has already seen the worst of the times in the recent quarters. These are the capacity expansions, the capex plans which the company has already initiated, and some of them have already become operational and a lot of them are getting operational in these years, which is FY23, 24 and 25. So post all these capex plans get completed, there will definitely be a uptick in the revenue and the margins going forward gradually. What happens is whenever these kind of new capexes are done, initially there is also a pressure on margins because the capacity of the plants are not utilized fully in the initial days. So that is also one of the reason other than inflation which creates margins pressure when the company is continuously doing capex in several divisions. So you have understood what went wrong with the company, why the share price was falling, and what is the management outlook going forward and how the company is expected to perform in the coming quarters or months. Now look at the valuations. Earlier, before the IPO, the stock was trading at somewhere around 2 times or 1.5 times the market cap to sales. And post COVID, because the business drastically went up and the management was very positive about the business, giving very high growth targets, the market was willing to give the stock almost 7 to 8 times the market cap to sales valuations. But later, when the targets were not met, when the margins pressures was felt, when destocking happened for this company's customers, the revenues were impacted in certain segments and margins were going down, and that's why the valuations again got derated, and now the company is trading at almost their median valuations in the last 5 years, which is nearly 3 times the market cap to sales. So is this the bottom? Can the stock not fall more is the question in everybody's minds. So it totally depends on how the company is performing in the next 2 or 3 quarters. If what the management is saying as per that, if the worst of the times are over, the formulations revenue starts increasing in the coming quarters also and gets normalized, and the other divisions continue to grow as they were growing earlier, then these levels can be the bottom in terms of valuations. But if this slowdown continues and the management is unable to maintain the targets which they are, the reduced targets which they are giving for FY23 and 24, then there is a possibility that the valuations can get further derated and the stock can fall to almost 2 times or 1.5 times of market cap to sales also from here on. So we can't say that the stock has bottomed out and the valuations are completely cheap. Even now, based on the present performance of the company, the stock is not available at a throwaway valuation. But considering the future filings, considering the capex which the company is doing in the future, from the long term perspective, it can be considered attractive to accumulate gradually based on the performance of the company going forward. Now, what should investors do? We will broadly categorize investors into 2 types. The first part of investors which are already shareholders of the company. So if you're an existing shareholder of the company, there is a high chance that because of the recent fall, you may be in a loss. So what should you do in such a scenario? Keep closely monitoring the quarterly results of the company. See whether whatever the management is giving the short-term targets now for the next couple of quarters or the next 1 year, if they are able to meet that and you see a gradual increase in the revenue and also slight improvement in the margins going forward, then you can gradually start averaging your stock quarter by quarter. So your average price comes down and you will be able to come out of the stock in profits. So what I would say is, don't consider the present price completely as bottom and go all in and average your position. Gradually average it every quarter as the management fulfills whatever targets they are giving. And for the investors who are looking for an opportunity to buy the stock, don't jump in at the present level. Watch for a couple of quarters and see how the management is performing. And when you're assured that whatever short-term outlook the management is talking about, that is being achieved, then you can take a fresh entry in the stock. As of now, from the long-term perspective, looking at the capex plans and looking at the new filings done by the company, from long-term point of view, the future looks bright for the company. So this is about Laurus Labs. I hope this quick video was helpful for you if you are an existing investor in the company or a new investor looking to invest. And I'm sure you will be able to make up your mind and take the correct action after watching this video. If you want me to make such videos on some other stocks in your portfolios, please do comment the name of the stock in the comments below. Don't forget to join our Telegram channel. Thank you for watching and have a wonderful day.